Hey guys, how's it going? Welcome back to the channel. Today I'm going to be showing you a forex trading strategy based off Stacey Burke and how Stacey Burke trades the financial markets. So, Stacey Burke has a lot of strategies in hand. It's up to you to choose one and just stick to it and only trade that strategy. He talks about setups. What setups do you see when you come to the market? He's not interested in trading, tiny movements or, becoming an expert in one pair and only trading that pair for the rest of your life. He's looking for setups, rinse and repeatable setups that happen all over instruments that he can easily spot out and just choose and focus on that. So, today I'm going to be showing you an example of a first green day and how Stacey Burke would have traded the first green day setup. As you can see on the USD CHF, the US Swiss pair, on Friday, this is Friday, as you can see the blue line here is the closing price of yesterday's price. So yesterday's closing price and today's opening price. The market came down, the price came down here, put a peak formation under the blue line and then shot up and then closed as a first green day and above the closing price. This is a Friday. Monday sets the high and the low of the week. That's the opening range of the week. And usually I don't trade Mondays because Mondays sets the high and the low, and Tuesday is the initial balance. So I'll start looking for trades on a Tuesday. And as you can see, this market is setting up perfectly for a long trade because we're at the low of the week. This was an inside day, We're looking for longs after Friday. So Friday is telling us to go for longs. Monday we don't trade. It sets the high and low of the week. And then Tuesday, what the market is doing is setting us up to go long because we're at the low of the week and we're also at the low of the day, the low of the session, the Asian session lows. So this is a perfect example on how to go long. If you go to our 5-minute time frame, it's not about the time frames, it's about the levels. Stacey Burke talks about he's not trading the 1-minute time frame. He's looking at the bigger picture. He's looking at the bigger weekly template, and then once price is in a certain level, then he goes into the lower time frames to find his entry. Now we're at the 5-minute. As you can see, this is the blue box, the Asian session. I'm trading the London session, which is the green box here. As you can see, the price goes down into the London session, takes out the low of the Asian session, and we're at the low of the week. Price comes up, retests the moving average, which is the 20 moving average, and continues going up to the blue line, which is the opening price of the day. It gives us 1 bounce, 2 bounce on the EMA. You could have entered here for a nice long move into the New York session. That could have gave you a 30 pip move. Very, very high probability 30 pip move. It's not about how many pips you're getting, it's about the size you're putting onto the trade. These setups are 90-10 opportunities. They're high probability, so you can leverage your whole account on this and not get burnt. It's not about the pips, it's about the size. And is this a repeatable setup? Yes. Can you put size on this setup? Yes. You could have entered here on the EMA at the low, or you could have entered at yesterday's closing price with the EMA in support. Also, this day, if you haven't noticed, Tuesday is the initial balance of the week, so it usually sets the high and the low after taking out the opening range high and low, and we can see a peak formation in place because the price came down and it closed below the opening price and then shot up and closed again. Exactly what happened here. So what happened here also happened here. So when this happens, we're looking for buying opportunities. What happens the next day? Price comes down into the low of the day, the low of the session, and when that happens, we're looking for buying opportunities. Why? Because this was a first green day with a peak formation put in under the closing price. Where could you have entered? This one was a bit tricky because price came down into London and then shot up, and you could have entered here. You could have entered on the closing price just below the EMA, or you could have waited for the gap time of New York to go long to target yesterday's high. So the way I entered this trade is because I trade mostly the London session. I live in Australia. Once I got this engulfing candle at the EMA and yesterday's closing price, I entered my trade here to go long. Stops just here, targeting the high of the day. Price did go against me in this instant, but I was very confident in the trade working out because I'm very confident in Stacey Burke's setups. We also had the Asian session highs not taken out, just sitting below of yesterday's high. So I was very, very confident that the market is drawn to this level because the market is just ultimately chasing liquidity. So the market came down, didn't hit our stop, continued trading on the EMA, and went parabolic in the New York session. Now, Stacey Burke does talk about timings. You could have entered here. If you trade ICT concepts as well, you can see the market came down and filled up this fair value gap before shooting up as well. So this is my understanding of Stacey Burke's setups and how the market moves, viewing the market from his lens, his point of view. I'm going to be releasing more Stacey Burke videos, so please make sure to like and subscribe. Thank you very much.